We have a great partnership here that we're announcing today. A young company, a CEO I really like, and he's trying to build a European AI company. The name of the company is Mistral. Today, we're announcing that we're going to build an AI cloud together here to deliver their models as well as deliver AI applications for the ecosystem of other AI startups so that they can use the Mistral models or any model that they like. And so Mistral and us, we're going to be partnering to build a very sizable AI cloud here, and we'll talk about more of it later on today with President Macron.
According to remarks made this morning by NVIDIA CEO Jensen Huang, quantum computing technologies are nearing an inflection point. The stock of quantum computing is probably receiving a boost from some encouraging inflation data, in addition to a positive endorsement from one of the most powerful CEOs in the computer industry. Jensen Huang is a prominent figure in the IT industry, having led the hardware company at the forefront of the artificial intelligence, AI, revolution. An endorsement from Huang or NVIDIA can frequently be sufficient to drive significant valuation rallies for pertinent companies in the context of developing technologies, such as quantum computing and self-driving cars. Leading energy management and automation digital transformation company, Schneider Electric today announced a partnership with NVIDIA to meet the increasing demand for AI-ready sustainable infrastructure. In order to support the next generation of AI factories throughout Europe and beyond, Schneider Electric and NVIDIA are collaborating to advance research and development (R&D) projects for power, cooling, controls, and high-density rack systems. The world leaders in accelerated computing and sustainability have joined forces in this unprecedented global alliance, which was unveiled during NVIDIA GTC Paris, to support the European Union's goals for AI infrastructure and its Invest AI project, which aims to raise $200 billion for AI. In response to the European Commission's AI Continent Action Plan, which outlines a shared mission to establish at least 13 AI factories across Europe, as well as up to 5 AI gigafactories, Schneider Electric and NVIDIA are combining their expertise in AI-ready infrastructure, sustainability, and grid coordination. According to Olivier Blum, CEO of Schneider Electric and NVIDIA are not just partners. Our teams are driving advanced R&D, co-developing the infrastructure needed to power the next wave of AI factories globally. When we work together, we've had great success implementing liquid cooling and next-generation power solutions designed specifically for AI data centers. By uniting the global leaders in accelerated computing and sustainability, this strategic alliance enables us to further accelerate this momentum and push the limits of what is feasible for tomorrow's AI workloads. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Stacey, I feel like I sort of keep up with the news. And what's the catalyst for this mega chip move from the lows?
Well, I mean, after Liberation Day, you know, the chips got hit pretty hard. They're a very global industry, if not the most global industry. And the idea of significant tariffs, not even on the chips necessarily, but on all of the products that contain the chips, which is basically everything, had the potential to cause a lot of disruption. And so at least for now, as those tariffs have eased, that's certainly helped a lot, right? We've also had a lot of the names reporting and, you know, especially some of the more cyclical names calling for a cyclical bottom in markets like industrial. And then clearly, you know, you mentioned NVIDIA, but the AI trade, which had sort of faded, is now clearly back on. And so I think it's a combination of all those things.
I like that.
You know, that has taken the stocks off the lows after they got completely whacked in April.
Let me reiterate those three. So for one, we're kind of, you know, resetting the clock and pretending, I guess, like the tariff issue never happened. Just on that piece of it. Right. Because, look, I think that's a good point, though. There's still 55% tariffs on China. Maybe that doesn't matter. Are there any takeaways from the various layers of tariffs or controls that, you know, NVIDIA, for instance, the last earnings call was supposed to be all about how much its China business had struggled because of export controls. Is nobody talking about that anymore? Like, is that just off the table?
So let's talk NVIDIA on that. So they clearly are. And in fact, the export controls have been meaningful. They're losing, tens of billions of dollars of business. What is helping them is that the rest of their business is so strong, it's actually okay. I mean, they took $8 billion out for next quarter. They guided $45 billion, which was kind of in line-ish with the street, but the street hadn't taken China out. If it wasn't for that, they would have guided 50. They would have printed 53 or 54. I mean, it's insane how strong that is. So that's where they're benefiting. They're ramping their Blackwell products. The demand is there. They're going to sell everything that they can get out the door this year. And at least for now, China being taken out now you could argue it's de-risked. Like anything that they can actually manage to sell into China, at least in the near term, will be upside rather than
you
downside.
And your colleague, others who follow the stock have argued, look at the Middle East deals they just struck. Look at what's happening in the EU. So to your point, they've got that tailwind. Then you're saying we also have actually a better improving economy. So simply the cycle we were worried was going to turn for the worse is actually maybe going to turn for the better.
Well, we don't know yet. I mean, what I said is like some of the cyclical names have been calling for a bottom. So take a market like industrial, which has been in a down cycle for like 8 or 10 quarters. So yes, at some point you ought to hit a bottom and hopefully channel inventories are lean. I think the question of sustainability is still open for debate. Right? I mean, because some of the macro data points in PMI and everything don't seem all that spectacular. And the tariffs, they're on pause for now, but I mean, they supposedly, the reciprocal tariffs supposedly come back in August, and we're waiting for the 232 tariffs on semi. So we don't actually know if the current strength we're seeing is actually real bottoming or if it's not. I mean, it could, in theory, just be pull forward in front of those tariffs. I'd say for now, though, things look better than people had thought. We'll have to see how things go as we move into the second half of the year. I don't think anybody knows.
According to Jensen Huang, founder and CEO of NVIDIA, artificial intelligence, AI, is the most revolutionary force transforming our world and the defining technology of our time. We are constructing AI factories with Schneider Electric, the vital framework that enables AI in every business, sector, and community. Schneider Electric has also launched a range of AI-ready data center solutions, such as the new EcoStruxure Pod and rack infrastructure, to support today's announcement. The prefabricated modular EcoStruxure Pod data center is a scalable pod-based architecture that enables quick construction of AI data centers and is intended to expedite AI advancements worldwide. In addition, a new rack system inspired by the Schneider Electric Open Compute Project, OCP, has been created to accommodate the NVIDIA GB200 NVL72 platform, which makes use of the NVIDIA MGX modular architecture. Schneider Electric is being incorporated into the NVIDIA HGX and MGX ecosystems for the first time. Earlier this year, Schneider Electric and ETAP used the NVIDIA Omniverse blueprint to announce the first digital twin in history for electrical and large-scale power systems in AI factories. These announcements build on a number of accomplishments shared by the two worldwide leaders. As an authorized CDU vendor for NVIDIA, Schneider Electric and NVIDIA have also collaborated to create a number of reference designs based on full electrical and liquid cooling, many of which incorporate solutions from Motivair's liquid cooling portfolio, which was acquired by Schneider Electric in March 2025. In order to build the AI factories of the future, Schneider Electric and NVIDIA will continue to accelerate their infrastructure projects through this strengthened and expanded strategic relationship, speeding up reference designs and new product rollouts. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
How much is riding on these days of talks? How much do you think ultimately does make a decision for you within your portfolio?
Yeah, I think we've seen the market react really well over the last couple of weeks to certainly a reduction in some of the tariffs on China and other countries as well. This would be very critical, I think, especially for the tech sector, especially talking about export restrictions. There's certainly parts of the tech sector like NVIDIA, most recently the electronic design automation companies that have been very hurt by export restrictions and tariffs. So for certain pockets of the market, I think this would be very impactful to see some of these trade negotiations play out.
Tiffany, how much of a risk premium is the president? When you look at any corner of the technology market, and you say, I am going to bet on a company that this president has recently spoken favorably about or not favorably about, as the case may be. I'm talking, of course, about the volatility that he brings to any trade negotiation.
Yeah, I think it creates a lot of pause when you're thinking about companies that may be in focus from the president. Companies that have been talked about or sectors that have been talked about recently. But, the worry as an investor is what will happen next that we haven't planned for or that we didn't see coming. So I think that, companies that have been spoken about, have been targeted, are reflecting a bit of a risk premium. And you see this in a lot of the tech companies that are trading, at discounts to where they were trading over the last couple of years, certainly relative to their own multiples, but also relative to the index as well. So I think that's reflected in some of the stocks. But again, the concern is what happens next, because it's hard to predict.
Boy, does Tim Cook want to know what happens next as well. And his own stock trading below usual multiples. They've been in the eye of the storm when it comes to the supply chain side of things. What do you make of the desire to make companies ultimately build in the US, perhaps be less profitable? Does that make them as appetizing as an investment?
It certainly doesn't. It hurts the profit margins, as you mentioned. I think it'll be interesting to see how all of this plays out, because it takes multiple years to build a factory here. It probably takes longer than President Trump is going to be in office. So do the announcement we've seen from companies building here, maybe some of them make sense economically, maybe some of them are paying lip service to the administration. But it'll be interesting to see how this plays out. But it's interesting that Apple specifically has been a little bit more defiant.
More defiant, but also perhaps more distracted is what people worry about. The fact that they are not playing catch up to this AI game as people had hoped with WWDC. What did you make of the event?
Yeah, I thought the event was a little bit disappointing for Apple. We were expecting to hear more exciting updates around Apple Intelligence, around AI, maybe around AI being incorporated into Siri. And instead, I think we saw more updates on improving the user interface, more features on existing applications. The applications that maybe incorporate the most AI would be their updates on visual intelligence or live translation. But those also feel like they're playing a little bit of catch up versus applications that are already in the market from other providers.
On my Bloomberg terminal, Apple seems to be the top holding in the Columbia Large Cap Growth Fund. So let me know if that's right. But I think so far this year, Apple has been trading on trade risk, right, on tariff risk. And when we were literally in the car on the way to Apple WWDC, we were asking ourselves, has this name started trading on that AI concern yet or not?
I think we've seen that a little bit around the WWDC event. And we certainly saw that after the event yesterday, where people were a little bit disappointed that there wasn't a big AI announcement coming out of the keynote presentation. So I think we're seeing that a little bit. But Apple, like a lot of big tech companies, I think are still trying to figure out their strategy around AI and are putting a lot of money behind it.
Tiffany, you set yourself up for this by saying the big question is what happens next. For the technology sector, what happens next?
I think we're still very positive on the tech sector for the rest of the year. There's a lot of good tailwinds for the sector. Obviously, tariffs and export restrictions could come out of left field for the rest of the year. But there's a lot of good tailwinds for earnings growth, including AI investment that continues to be very strong across multiple parts of the market. If we look at earnings growth expectations for the rest of the year or for the full year, the tech sector is still expected to grow much faster than the rest of the market. And as I mentioned before, a lot of the valuations across certain subgroups of tech look very attractive versus their history. So we're still very positive on the sector.
And are you positive on the commitment of capital coming from these companies? Look at what Mark Zuckerberg's doing, devoting his own time, his own dining table, but also sheer quantities of cash to make sure that he tries to win AGI, as it's known.
Yeah, absolutely. And he's not alone. Microsoft, Apple, Alphabet, Amazon are all making huge investments into AI, and I think that has a great knock-on effect for parts of the semiconductor equipment, parts of software, other parts of the economy, including industrials, that all feed into that AI infrastructure.
NVIDIA CEO Jensen Huang said at the VivaTech conference in Paris on Wednesday that the company will construct its first AI cloud platform for industrial applications in Germany. The technology, which combines robotics and artificial intelligence, will assist automakers like Mercedes-Benz and BMW with everything from logistics management to product design simulation. In a series of announcements centered on Europe, Huang detailed plans to open up NVIDIA's compute marketplace to European enterprises, expand technology centers in 7 countries, assist medication research by companies like Novo Nordisk, and help AI model builders become more sophisticated in many languages. During a nearly 2-hour lecture in front of a crowded audience, Huang stated, "We will increase the amount of AI computing capacity in Europe by a factor of 10 in just 2 years." He described plans for 20 AI factories, large-scale infrastructure intended for creating, training, and implementing AI models in Europe, saying that the continent has now realized the significance of AI factories and the relevance of AI infrastructure. According to 2 persons familiar with the situation, Huang is scheduled to meet German Chancellor Friedrich Merz on Friday when he travels to Berlin. NVIDIA didn't say where the plant will be located, how much it would cost, or when work would begin. However, since Intel and Wolfspeed halted plans to build local plants last year, a German location would be an early victory for Merz's new ruling alliance. The European Commission announced in March that it will invest $20 billion to build 4 AI factories, despite the fact that Europe has not kept pace with China and the United States in the development of AI technologies. Additionally, NVIDIA is collaborating with European AI leader Mistral to provide AI computing for European companies that utilizes 18,000 of the newest NVIDIA chips. According to Huang, sovereign AI is essential. No business, sector, or country can outsource its intelligence. Huang has been touring the world to emphasize how crucial it is for companies to embrace AI and the risks of falling behind. He claimed in London on Monday that Britain's AI research base could not reach its full potential due to a lack of computing capacity. Huang reaffirmed his belief that quantum computing technology is at a turning point, independent of artificial intelligence. NVIDIA's most sophisticated AI systems would need years to process certain problems, but quantum computations could solve them. In the upcoming years, Huang continued, quantum computing will solve some interesting problems. Speaking about the promise of quantum computing at NVIDIA's annual Software Developer Conference in March, the CEO echoed remarks he made in January that suggested practical quantum computers would be 20 years away. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Editorialize. Are you surprised the market is not reacting more positively to, I thought, was supposed to be a positive development?
Yeah, we got positive developments regarding trade today, and we also got very good inflation data as well. So you would expect perhaps we get an even bigger rally in the stock market. That would suggest a lot of it was priced in, that a lot of people were assuming, and a lot of investors were assuming that the worst was over in April when we saw that big decline. And like we talked about yesterday, the assumption was things will not get worse. They could get better. If they did get worse, the market was offsides. But I think the market's telling you today that a lot of this was priced in. And Howard Lutnick hammered that on the interview this morning on CNBC, saying, you know, Chinese tariffs are not going up from here. This is it. That gives a lot of certainty to manufacturers, importers, et cetera.
Ed, how are you thinking about it?
Yeah, so a lot of the questions we've gotten here at Raymond James is exactly what does the president mean when 55% remains? And what we've heard is that that's the 20% fentanyl plus the reciprocal plus the 232s. These are pretty high tariffs still. Going forward, are we ever going to get the details? Maybe, but not anytime soon. What I'm really focused on is what can happen next. And we have a G7 meeting that's occurring in Canada. Can we get a lot more good news? Can the market react to that going into the week next week as that starts on Sunday, Kelly?
Right. So that said, if you know, is the market basically just kind of buying the rumor, selling the fact here, Ed?
I think that the market wants more information. I think that there was a bit of a concern that the first reaction was we agreed to go back to what we agreed to previously, that if all we're getting out of this is what happened in Geneva, is that enough for the market, Kelly, or do we need more? We have a lot of questions at Raymond James about the new restrictions on chemicals, on jet engines, on the Huawei Ascend chip. What have those come off? I think that the Ascend chip is probably the question that I get the most from clients, and that's really important to the semiconductor space. Do we see that restriction stay on? Back in Trump 1.0, they always made sure there was a distinction between the national security lane and the economic lane. Right now, if you put a lot of these export controls into these negotiations, that is bringing those two together, that could be a huge problem for this administration on Capitol Hill, because again, going back to that first administration, when there were a couple of times when they veered into the national security lane for these negotiations, Congress came back and told Trump no, and they passed new legislation. Congress right now is considering legislation to go much harsher on tech export controls, especially on semiconductors.
Yeah.
The more he includes this, the greater the risk from Washington on that sector actually occurs.
And I find that fascinating. You just said that the question you get the most from people is whether they can have access to Huawei's Ascend chip. I mean, that's extraordinary. Just talk a little bit more about that.
Well, it really goes into the question as to how far we are going to restrict U.S. technology that is going into China and how much Chinese technology can be the base technology for a lot of the rest of the world. What we've seen from U.S. companies and those who use U.S. technology is a question on whether or not if we restrict it too much, are we cutting off our nose to spite the face? Are we giving an unintended consequence where China can start to rise? And so having the Huawei Ascend chip restricted globally was one of those ways to kind of cut off some of those restrictions, and is really a question on how aggressive this administration is going to get coming from here on semiconductor, on semi-cap equipment, on different EDA software that goes into China. The more we restrict that, the more this market is really concerned about what Trump does next.